Today on the live stream, I was able to identify a high probability trade using volume profile along with order flow. And in this trade, it netted over 100 points in the NASDAQ. Today's video, I'm going to show you guys what I was looking at to identify the target and the entry point into this trade. So now if we come over, we look at this chart real quick. Here's where I entered the market in the wick of the candle that actually caused the move on the way down. And right down here is where I exited the market. Now, to be fair, I did not exit at the exact target. I did get scared out as we were only a couple points away from my initial target. Now, as we come over and look at the 30-minute chart, I'm going to go ahead and recreate this by drawing out the volume profile that I was looking at the time of essentially taking this trade. And I placed the trade, I think somewhere around 9:30 or so. So I'm going to go ahead and draw the profile out like this. Now, within the volume profile, there's a couple key levels that we look at. One of them is going to be value area high. The second would be the point of control. And the third would be value area low. However, when trading with volume profile, there's still some other areas of interest that are very, very important. One of them could be other high volume areas. But more importantly, in this example, I was looking at the low volume node or the minus development area. Now, the reason this area is significant is the first time the market comes into it, we expect the market to either bounce or consolidate around this area. And this quite often will act as a magnet. So in this example, I'm going to highlight this zone real quick. Notice, what did we do the first time we came into it? We rejected right back out. Was there a way to enter this trade using order flow to minimize the risk and try to get a much larger gain out of this trade? I want to let you guys know right now, Apex Trader Funding, 80% off all their evaluation accounts, $85 activation fee. Take advantage of this offer. Use the link in the description box down below. Use code Mike at checkout. Now, before I go ahead and share with you guys the entry criteria for entering this trade using order flow, I want to bring something else to your attention. At the time in pre-market, when I'm looking at the overnight volume profile levels, right here is value area high. And quite often, if we're above value area high or below value area low before the market opens, that's also a good indication that sometime during that session, the market tends to migrate back towards the overnight value area high or value area low. So now as we come back over and we look at where I actually entered the market, keep in mind, this is on a 5-minute chart, but it's going to be somewhere around the 8:15 candle. The 8:15 is the closing price. So it could be anywhere from 8:10 to 8:15. However, when we bring over the order flow chart real quick, I zoom things up a little bit. So hopefully you guys can understand the concept and see things quite clearly. But we had a couple things working for us. As the market was pushing on up, we had multiple things. The first, if we look at the delta, notice we had 153, then we had a positive 119, and then it went to a negative 1. Also, on this candle, on the 8:13 candle, on the 1-minute time frame, I want you guys to pay attention to the highlighted cells right here. And you can see the green dots right next to it. That represents an imbalance in the market. And as I'm looking at this, I want to look for 3 or more consecutive imbalances. And right here, we have 1, 2, 3, 4, 5, 6 consecutive imbalances. We have a space right between here, and then we added another 2. Now, whenever we see the imbalances, if you're looking to be bullish on the market, you want to see the market continue to push. But in our example, we saw the imbalance. And then on this candle right here, what did the market do? The market spikes up above the imbalances and then comes back down below it. Just like if you've ever traded structure, when you see a look above failure, this is very similar. So not only do I have the declining delta as the market's going up, and this candle actually producing a negative delta print, but we also have the imbalances where the markets tried to push up and then got back below those imbalances. Now, when I entered this trade, I had a couple of different ways in which I could place the stop loss. The stop loss could have either went on the other side of the imbalance or at the very high of this swing point. So if we come back over and we look, and I did enter on 2 different contracts on this, but if we even look from the worst contract right up here to roughly the top of the candle, you can see that was only 10 points of potential risk. And in this example, the worst target was looking for 106 points. Now, keep in mind, I did not get out the exact price. If you notice, both of these contracts, one got out at 25,122.00. The other contract was exited at 25,124.5. Now, if we actually go look at where that imbalance came in, the top of that imbalance zone was actually 25,121.5. So as you can see, I did slightly enter I did slightly exit just above that zone, but it was only by a couple points. And since we already had a pretty good move on the way down, I got a little bit nervous and I was worried about the market ripping back up, since lately, what do we see in the markets? All they do is buy the dip and then let it rip. And knowing that once we come into this minus development area, quite often the market will try to slingshot out. Now, in this example, from the bottom of that candle to where we catapulted out of that area, we saw the NASDAQ actually rally up 67 points, come back into that zone again, and then rocketed right back up to then go ahead and produce a new all-time high in this market.